The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Hello and welcome to Your Money, Your Call. I'm Julia Lee from Bellamar, and joining me tonight we have on the panel Nick Radge from www.thechartist.com.au. Lots to talk about tonight. We've seen Cochlear shares with a massive slide after its first half numbers. We've also seen Forge Group going into voluntary administration, and we've seen ANZ coming out with a set of stellar first quarter numbers. So what does this earnings season mean for your portfolio? Let's ask our panel. I mean, Nick, just looking at the technicals first, and, you know, for the market, we've seen a pullback in the month of January. The first week of February didn't look too crash hot. No. And slowly we're seeing a bit of a revival back over that 200-day moving average line. Is it going to last?
Yeah, well, we spoke about this big area between 5,000 and 5,100 last month, and we came right into that area and we've bounced. We've got a few dividends coming up with the bigger names. ANZ reported today, good numbers, and that sent the banks going CBA. So you've got, again, these top 20, top 30 stocks have got that upside momentum going. So prices have bounced off that critical level of support. Monthlies are still a little bit wishy-washy in my view, so we're still a little bit cautious. I think worst case scenario is we're going to, well, if we break through 5,000, that would probably lead to a much bigger correction. But I think best case scenario at the moment would probably continue to trade sideways. But the fact that it's holding up well, it looks good, and I think you've got to go with momentum, which remains up. Okay, so time for a little bit of consolidation, but looking positive in the short term. That's always good to hear. I have to ask you, Nick, from a technical point of view, how are the banks looking, in particular ANZ, and of course CBA is out tomorrow with its results? Yeah, CBA is still the stronger bank. We've been holding CBA for, oh gosh, 18, 19 months now, and there's no deterioration in the trend in any way, shape or form. We've had a nice sideways correction here, which is very, very strong in this kind of a trend. It probably didn't pull back as far as what we were actually expecting. It only got back to $72. So I'm looking in the short term and probably maybe over the next week or so, CBA to continue to push up towards $80. Bigger targets for us, $100. So I think you've just got to be a buyer on any dips at the moment for CBA. Okay, so that's a little bit on the banks, a little bit on earnings season and the market. We've got plenty more for you this show, but let's go to our first caller. Well,
I'd like to ask the panel about McMillan Shakespeare, about Slater and Gordon.
Okay, so looking at McMillan Shakespeare and Slater and Gordon. I mean, McMillan Shakespeare, it's been a bit of a roller coaster ride. We did see the government election coming through, and that certainly boosted the share price a bit, but since then it's been struggling a little bit. We've just got the chart out up there, Nick, and the last couple of quarters we've seen consolidation. Really, what are you looking for from McMillan Shakespeare before you get interested in jumping in on a stock like this?
Yeah, look, this consolidation is interesting because it comes on back of that massive sell-off that we have, that massive capitulation. And that capitulation, we saw a lot of, obviously, sellers coming in there, but the fact that prices were able to bounce quickly also showed there was a lot of buyers in there buying the dip. And, you know, I know there's a few well-known people on this who appear on the show that doubled up their positions. So what we're probably seeing a lot of now is actually what's called distribution. So those people that loaded up down around those $4, $5, $6 area on that big move down are probably saying, you know what, we're happy to be doubling our money on that extra position and we're now getting out. So what we're seeing is this distribution, this selling going on at the moment. Prices are therefore held back from moving higher, but this sideways price action is good. So what I'd want to see now is a break to the upside. So consolidating here at the moment, I'd want to see volume dropping off, which it is slowly doing, and then a break to the upside and see if we can't close that gap and move back up towards $16, $17. But no time to get in it right now. You've got to wait for that upside momentum first. Okay, so waiting for a bit of a boost in terms of McMillan Shakespeare. What about Slater and Gordon? SGH is the stock code there. In terms of the share price action, 2013 was great. Yeah. Is 2014 going to continue on with that positive momentum? Well, we can never know that ahead of time, and that's the whole idea of being momentum trader. We just go with the flow. If it's going to go up, we hop on board. If it goes down, we hop off. Simple as that. It's kind of hitchhiking, if you like. At the moment, Slater and Gordon is consolidating. If I was to put my technical hat on rather than my momentum hat, we've got what's called a head and shoulders topping pattern here. a breakdown through really today's low. If we break down through there, we can slide all the way down to $3, $3.20. But really where we've come from, that would be considered relatively healthy. Those trends that we're following, very close to being knocked out of that at the moment, so we're very close to standing on the sideline. But look, stocks that historically trend very, very well do tend to trend very well in the future, so it would be one we'd be watching if prices were to continue to push higher.
Okay, so a little bit cautious because of the head and shoulders pattern, but it is typically a stock that does trend well. So that's SGH, Slater and Gordon. And we've got Kevin on the line from Brisbane. Kevin, welcome to the show. What's your question?
Good evening, Julie. My question is considering the Macquarie Group.
Sure.
They took a hit today. Now, I was wondering if people were transferring back into full majors or whether the report they put out wasn't as good as expected. I would like the panel's opinion on that, please.
Sure, very topical question coming through from Kevin. We did hear an operating update coming through from Macquarie Group. The stock was down 3.8% on a day where the banks were rallying quite hard. In fact, ANZ was up 2.2% today. So are we seeing just a bit of a switching from Macquarie into ANZ, and what did you think of the update? I mean, typically, you know, the markets do expect that when the markets are going well, a market-facing business like Macquarie would also be outperforming, but Macquarie does tend to be a little bit conservative. And I guess, Nick, when I look at earnings season, often it's quite significant from a technical point of view because it can signal either the continuation of a trend or the start of a new trend.
Yep.
Now, Macquarie's been trending quite well in an upward motion.
Yep.
Is this the start of a bit more of a pullback and a downward trend for Macquarie?
Well, every downtrend has to start with a pullback. It can't do that. So today, Kevin, look, a down day, and I think it's a very valid point to say the rest of the banks had a good, solid up day and Macquarie's had a nasty down day, and that's, I think there's something right there. I don't think what we've seen today is enough to change the trend. We've been riding Macquarie Bank since late 2012 from about the $28 mark. Our momentum models are still suggesting long is the way to go. I think some consolidation here would be very, very healthy. That said, we've got a trailing stop in around that $50 mark, so there's not much room to move, and we'll be exiting our position should it break down through $50. But if we can consolidate here above $50 for another couple of weeks and then break out through recent highs at 57, no reason why that trend can't continue. You know, over the last 12, 13 months or so, we have had deeper retracements than what we've had. So it's not so much the depth of the retracement that concerns me. I think the point made that all the banks were up, Macquarie was down today. I think there's something there.
Okay, so a little bit cautious on Macquarie and waiting for that breakout before becoming positive from a technical point of view. We've also got a call from James. He called out earlier. He was asking about Cardno, and he asked if it's a good long-term stock given its international exposure. And a very relevant question coming through from James, given that we've seen Forge going into administration, a profit downgrade coming through from Radge today. Well, what about Cardno? On the charts, we have started to see a bit of a pullback, so would you be, what would you be looking for before becoming interested or not touching this area at all?
We'd need to see some buying come in. Admittedly, the stock did have a big spike down on Friday, down below that $6 mark. There wasn't a huge amount of volume coming in, but the stock did close high in the day, which means there wasn't a great deal of selling going on. That's a positive. The other positive with it is it did the exact same thing September, October last year at the exact same levels and then bounced up towards that 720 area. So a little bit of buying demand down here, not a huge amount of support. For me, trend is currently down. It's a messy trend. I think there's better opportunities out there. I'd be standing aside.
Okay, standing aside on this one. Let's go to our next caller. We've got Alan on the line from Newcastle.
Adelaide Brighton, CSR or Dulux.
Okay, so looking at Dulux, Adelaide Brighton and CSR, so looking at that building products area, I mean, these building product companies all have been doing well. I think Adelaide Brighton, Dulux has been hitting all-time record highs, CSR on their way back as well. Just looking at the charts, Nick, which one's looking the strongest at the moment?
Well, I have both Dulux and CSR myself for no other reason than they're going up, Alan. And today we've seen Adelaide Brighton take out all-time highs, and As investors, that's what we aim for. We want stocks making all-time highs, blue sky territory. In terms of which ones are the strongest, I guess if we look at relative low momentum, Adelaide Brighton does have some resistance just up here, all-time, or just close to all-time highs up here, which, you know, we've got to go all the way back to 2002 to see. So it might have a little bit of a stall up here, but other ones out there, let's just have a look at Dulux from a relative strength perspective. Again, very close to all-time highs, very strong trend, probably better trendy stock here than Adelaide Brighton. And the other one was CSR, and that's probably not far. Oh, CSR is well off its all-time high. That's a stock that's been up at $8 previously, but coming off a very low base, trying to trend very, very well. So, look, they all look pretty good. As I said, I've got CSR and Dulux myself, and other parts of the portfolio also have ABC. I don't think you can go too far wrong with stocks hitting, you know, 52-week highs.
Okay, so all looking good. Adelaide Brighton not in the portfolio at the moment, but CSR and Dulux are. And we've got William on the line from Young. William, welcome. What's your question tonight?
Oh, good evening, Julia and panel.
Hi.
My question is on Empire, EPD.
Mm-hmm.
It's a very thinly traded stock with very few buyers and sellers, and I was just wondering what the panel thought of this stock.
Okay, so having a look at Empire, it's in the technology space. I think they specialise in applications for the infrastructure space, so a lot of its revenue comes from the state government, also natural resources, energy. I think those three groups make up around about 80% of revenue. We might start off with a technical view on this one first. EPD is a stock code. Nick, what do you think of a stock like this?
Yeah, William, look, a little bit difficult when we get such low liquidity in a stock like this, mainly because you get days like today where it can whip around and on next to nothing volume. So we've got to kind of focus, rather than on traditional patterns, we've got to focus more on longer-term trends. And unfortunately, stocks that are tightly held like this or very illiquid do tend to trend very, very well. Not that it helps you out a great deal because it's hard to get in and out of stock. So we've come a long way from 5 cents up to around that 60, 70 cents. Stock has been consolidating for about 4 months now. As I always say, that's a good sign. I'd like to say it consolidates on low volume, but it's almost impossible to say with this kind of a stock. But pattern-wise, it's doing the right things. I probably wouldn't want to see it go any lower than 60 cents at this stage, and certainly not go any lower if volume accelerated. So, look, hold on to it. Consolidation after such a run is a healthy thing, generally speaking. I guess if you don't own, you'll want to get onto it. You want to wait for it to move up first. So we'd probably want to see a break up through 80, 83 cents before hopping on board.
Okay.
I'd like the panel's opinion on Neuron Pharmaceuticals, NEU.
Sure. So looking at the biotech space, and I think this is a biotech company which is based in Auckland, New Zealand. It does have offices in Australia as well as in the US, and it's focused on drugs treating the disorder of the central nervous system.
So, Tony, it's come a long way from 3 cents, made a high of 14. Very volatile at the moment. Looks like there's a lot of speculators in this stock. You can see big volume bubbles come in and good price action. So probably a lot of day traders mucking around with these lower price stocks. Big support at 9 cents. I think if it breaks 9 cents, you don't want to be in it anymore. So just a bit of caution. Volatile up here. A lot of speculators in it. I'd say that's going to be the pattern to go.
Charlie, welcome. What's your question tonight?
Yeah, hello. The stock is BMB, Bellamar Resources, and I was just wondering if the boys can have a look and see how the charts are looking. It's getting a lot of volume, and it's gone up about 50% in the last week.
Sure. So looking at Bellamar Resources, BMB is the stock code there. It's a relatively small company, so won't spend too much time on it. The stock's at about 16 cents, 14 cents it closed at today, which is quite close to the 52-week high, which was at 16 cents. Having a look at this one, it's spiked up quite heavily, Nick. When you see a stock like this, how would you manage a position in a stock like this?
Yeah, well, the important thing here, Charlie, is not necessarily the spike. What you want to look at is where the close is and the volume that's being trading. There's this old saying, right or wrong, but there's an old saying that amateurs open the market, professionals close the market. It's probably not so much applicable to a stock like this, but what we want to see is how the stock is reacted in its closing price compared to its volume. So yesterday we had a big upward volume day, a very, very high close, and today we've come back a little bit. So what that suggests is that yesterday there was a lot of selling into that closing price. Now that's interesting because if we have a look back in the charts, we can see a significant line of resistance back to August, September last year at the exact same price. So we've come a long way very, very quickly. We've hit a moderate line of resistance. I won't call it a significant one, but a moderate one, and that's probably enough for speculators who have had a good run of this to turn around and say, you know what, I'm going to take some profit right here, and that's exactly what's going on. So I guess from a favourable perspective, if we can see some sideways price action right here without too much weakness, that would suggest to me that weaker hands are taking profits. That would be a positive thing, and then resume long positions if we were to break up through 16 cents. If we see immediate weakness right here, right now, then what you're seeing is people getting out and panicking out, and it's probably going to take the share price straight back to where it's come from.
Okay, so I noticed that they have been issued a speeding fine by the ASX, and they do say that there's really no other explanation to the recent increase in price and volume in the company, except for they've recently made an announcement regarding an update on the Togo phosphate tender process in West Africa, but they don't deem this to be price sensitive, so maybe just a little bit of caution given the nature of that particular update. It is now time for a viewer email. Let's go to one from Peter, and Peter writes, could I please have the panel's thoughts on the Cochlear result today? The poor result seems to be down to a delay in approvals for a new product, currency hedging issues as well, some loss of market share and a patent dispute in the US. Aside from the loss of market share, all of these issues seem to be temporary. Thanks from Peter. Now, Nick, I can see you itching to get in on this one. What do you think of Cochlear?
Yeah, it's very interesting. Very similar patterns to what we've talked about, over the last year or so with QBE. You get a price shock situation. Remember, we've talked before about the three-step turnaround. So step number one is a big capitulation. Now, we had that actually last year. Cochlear is no stranger to these kind of events going on. So last year, May, the share price absolutely walloped down, massive buying came in. Now that's the first step, so that capitulation and the insiders sitting back at those lower prices taking it in. So that's step one. Step two is a broad sideways consolidation where long holders who didn't hit the capitulation just get bored holding the stock, but the insiders are sitting there and accumulate the stock. That's what we've seen. Now today looks like it's come out of the blue. But the important thing today, and it looks nasty at first sight, but if you look at the charts very closely, and again, I stress the closing price today, and this is a good example where the professionals closed the market. We've got a major stock, all the professionals in there. We've got a very high closing price today on huge volume. So buyer demand is in here, and interestingly enough, this is the exact same price as we hit in May last year. So whoever was keen to buy it in May last year has stepped back up to the plate today and said, you know what, we'll take more of these, thank you very much. So I think Cochlear is being accumulated. I'm not saying this is the end of the weakness, but there's some very, very strong demand in here, and I think if you're taking a long-term view based on the fundamentals, this is the kind of area you want to buy because you're being supported by some pretty big players out there.
Okay, so from a technical viewpoint, looking really interesting, especially just hitting those same prices as May last year. So watch to see whether we get the same type of price action. Let's go to our next caller. I've got John on the line from WA. John, welcome. What's your question tonight?
Hi, Julia. How are you?
Good. How are you doing?
Not bad. Look, I just wanted to ask what the boys thought there of Brickworks.
Brickworks, now, it is a bit more of a complicated structure. Yeah. They've got the 43% holding in Washington, Saul Patterson, some property interests in there as well, and then their core business and funds management, and then their core business, which is in bricks, roof tiles, and concrete. Technically, what do you think? Is it in the same class as the likes of CSR and Dulux?
Certainly not as trendy as those, or historically it has been, but not at the moment. It's chopping higher. This is the 7th time we've hit this price. And reversed. Well, I'm not saying we're reversing right now, but we're at that level where it's reversed before. So I'd be a little bit cautious. We have been above it once, very, very briefly for a week or two, tagged $17 and came straight back down again. So there seems to be some kind of a resistance line running through here. Trend is up. No reason why you shouldn't continue to hold it at this stage, but I would expect some sideways price action with profit taking going on.
And we've got Luke on the line from Brisbane. Luke, welcome. What's your question tonight?
Hi, Julia. Just looking at Westpac, it's come off $30 and it's trending nicely. At what level should you take profits?
Okay, so what level should you take profits with Westpac? We might go straight to Nick for that question. What do you think, Nick?
$35, Luke.
$35.
Like CBA, it's probably going to go up and retest the recent range highs, which is at $35. It's tested up there twice now, and as you said, nice little support here at $30, and we've bounced off that significantly. And I think as we come into some of these banking results, we'll continue to see that momentum. So yeah, trade up to $35. I don't know about taking profits up there. If it's breaking out to those highs, you probably want to stay with it, but I think 35 is on the cards.
Would you be buying right now, Nick?
Yeah, the banking sector as a whole, the index, we actually reviewed it for our clients tonight, and the technicals look very strong. So, you know, I think you've just got to go with them.
This is rare. We've got agreement. So
yeah, between the fundamentalists and the Chartist.
The fundamental analysis and the technical analysis matching up there for the banks. Let's go to our next call. We've got Francis on the line from Sydney. Francis, welcome. What's your question tonight?
Thank you, Julia. I would like to ask the panel about ARI.
Okay, so let's have a look at Arium. Will it ever go back to its old highs? And at least will we see a better result in terms of the share price action? Nick, how's it looking?
Francis, interesting chart. Now, not everyone is into technical analysis, and that's fine. But there is one pattern that academics actually give a little bit of weight to because it does have some kind of predictive power, and that's what's called a head and shoulders basing pattern, or a head and shoulders pattern. Now, Arium shows that pattern. As I said, there's actually some data out there proving this pattern is actually quite good. It must reverse a big long trend, and that's exactly what's happening here. So, bottom line, we've broken the neckline of that pattern, which has triggered it, and we're looking for an upward target around that $2.29, $2.30 area. So it's a little better than where we are right now. I don't know about $4 just yet. Let's do one thing at a time, but it certainly looks quite good. I wouldn't want to see it to go back through 140, 145. I'd be concerned if we got a close down through there, but whilst it stays up there, look for 229, 230. Okay,
so I guess the big question, Francis, is whether, you know, the market is a little bit too bearish on Arium, and whether we do see a better than expected result coming through, and certainly the technicals looking quite interesting at the moment. Let's go to our next call. We've got David on the line from Canberra. David, welcome. What's your question for our panel tonight?
I've just got a question on Corp Group.
Looking at the stock price, what do you think, Nick?
Yeah, not a great deal going on there. Similar pattern to Flexi Group, actually. Both stocks have been trading sideways for about a year now. So Credit Corp, some good support at $8. I'd only really be concerned if it broke down through $8. That said, it's not doing anything at the moment. So personally, the way I would do things is not be involved until we started to see some upside momentum. There's other stocks exhibiting upside momentum. I would rather put my money on those now and let them run. Something like this, it may have its time, but not at the moment.